welcome back, everybody, to another episode of the Nonprofit Show. We're really excited today because we've got two things going on. We're going to be talking with Jason Garcia about nonprofit banking relationships and how to get going with credit. And then we're also going to be welcoming Jason and his team as one of our new sponsors on the Nonprofit Show. So we're very, very excited. Welcome, Jason.
Thank you. Thanks for having us.
And we have the amazing Ellie Hume joining us today as a co-host. And so we'll get a little bit more into that, but really an exciting thing for us to have Ellie from YPTC joining us as another voice in the finance sector. But we are here because we have these amazing partners like Holdings, as I mentioned, but we also have Fundraisers Friday, JMT Consulting, Interim Executives Academy, Your Part-Time Controller, Bloomerang, American Nonprofit Academy, and Staffing Boutique. I'm Julia C. Patrick, CEO of the American Nonprofit Academy. And as I mentioned, Ellie Hume, your part-time controller, one of the directors over there. Ellie, this is your second episode that you're appearing on. Your first one was amazing. I can't imagine getting any better. But I love having you in this conversation today because of your finance background and the work that you do. So this is going to be amazing.
Yeah, I'm super excited to participate in this conversation because I think nonprofits need to hear all about establishing credit and if it's possible. I can't wait to learn myself.
Yeah, it's gonna be really amazing. Well, Jason Garcia, no pressure, but we've put a lot of weight on your table today, haven't we? Because we're he's going to answer all of our questions and he's going to get us all straight. So Jason Garcia is the CEO of Holdings, and you can find more about he and his team at holdingsforgood.com. Before we get into the meat and potatoes, talk to us about Holdings and how you came up with this and how you work and operate.
Yeah. So I came from the banking background. I've been in banking most of my career, and we've been focused on, in my career, I've been focused on community banking. How do we build a financial partner for certain communities and help them access the financial products that they need, but also someone that can help them achieve their goals beyond just the sending money and holding money. And so I worked for a couple of different institutions that help startups, and there's a lot of similarities with the nonprofit world. We've found in starting Holdings, we've been looking for a community that really needs a lot of help and has finance at the heart of their business, but may not have the budget or the trained finance staff in order to do some of the things that they need to do in order to be successful in their missions. And so in my career, in looking for the next kind of community to build around and to help, we found that nonprofits are kind of the area that we have a passion for, but also that has a need for the financial tools that we built. So Holdings is designed specifically for nonprofits. And we work with, from small to quite large, mid-sized nonprofits across the nation to help them access different financial products that they might need to be successful. And we've started on the kind of bank account side is where we started 2.5 years ago. And we've expanded from there with, things like invoicing and bill pay. And we'll talk about credit today. We do have some lending options in our product. Not as, it's a newer product. It's not as extensive as we'd like it to be, but yeah, so our hope and kind of mission is to be the dedicated partner for nonprofits across the US and help them achieve their goals and hopefully increase their chances of success in their missions.
Wow, I love this because Ellie, there's so much fear around that banking relationship. I think when you're a nonprofit, you're so used to going out hat in hand to the banks and trying to get them to partner with you on things, as opposed to being, in that relationship piece. So this is really cool, isn't it?
Yeah, I really agree with that. And I think, nonprofits typically look straight to their community banks right in their neighborhoods so they can, have a person right there that they can go to when they need to. They can walk in, get the signatures, do all the things. So I'm really curious how your bank is a little bit different than that and how they establish a relationship with you and what you have to offer that's different than that community bank feel that's in their neighborhood where they are.
Right. Well, let's get into it, and let's back up a little bit and ask, like, if we should have a credit strategy and what that might look like. Um, I would venture to say, and both of you can answer this question, do you even see nonprofits have a credit strategy? Have they even defined this? I mean, Ellie, you're like, not so much. Jason, what do you think about this?
I definitely think every organization should have a credit strategy, and you should be actively building that credit strategy. I think the larger you get as an organization, um, you start hiring in people that kind of have this naturally built in, and the relationships and those types of things. And so at the top end of our kind of customer profile, they've got a strategy, they've got they're thinking about who to access credit for and how do they build those relationships in advance of needing it. But at the earliest stages, you kind of need it the most. So even when you're kind of starting out, I think it's good to have good credit hygiene where you're building up the different aspects that help you be successful in accessing credit. And the best time to talk to different credit providers is when you don't need it. So if you're waiting until last minute, and there's a saying in kind of the finance industry that like the best time to raise money is when you don't need it. And it's definitely true on the nonprofit side, is like if you have a fresh fundraise that just happened, that's a great time to start thinking about loans. Don't look at it only as kind of a bridge or, oh, I'm in trouble and now I'm gonna try to go look at loans to kind of piece that up. I would start way earlier when you're flush with cash.
Yeah, I could not agree with you more, Jason. That is so, so true. I know I've talked to nonprofits so many times about when is the right time to apply for a line of credit. But I think it's really interesting, and I hope that we talk a little bit more about what other kinds of credit there might be for organizations beyond a line of credit that they need to be thinking about in those early stages. And even as you're starting an organization, you can't just get a credit card. You can't, if you don't have a lot of money in the bank, you can't get a line of credit. If you don't have any assets to pledge against a line of credit, what do you do in those situations?
Well, if you're not able to access the loans today, the idea is there's ways to build your credit that are in advance of actually taking a loan. And when I talk about credit or loans, that also includes credit cards and those types of things. But if you do have vendor relationships, if there is something that you're working with, whether you're sourcing swag or you're sourcing whatever it might be in your programs, there may be an opportunity for those vendors to report to credit agencies. It never hurts to ask, do you report and who do you report to? Because there's ways to actively build your credit up before you're actually getting a credit card. You don't have to have a credit card or a loan to build your credit. There's ways to do that, to have these different creditors or business relationships. Because in the nonprofit world, there's a lot of business relationships that you have, especially if you have government contracts.
Yeah.
The government will help report on those things and help you build your credit. And so, the idea of building up your business profile through credit agencies, you should be doing that even when you're not even thinking about credit cards, loans, or stuff.
So let's explore that, because I think that's a great question, and I think we're going to dig into that even more. But let's talk about some of the documents that a banker or a financial institution is going to want, so that you don't just like walk through the door or email or jump on a Zoom call and say, okay, get me a line of credit. What are some of the things that a banker is going to be looking for in terms of documentation, Jason, so that we can get the conversation started?
Yeah, I mean, in order to, so every organization, institution, for-profit, nonprofit entity has to have a bank account when you first start out, right? So you're going to need these documents regardless. And obviously, in order for you to get the tax benefits as being a nonprofit organization, you need the IRS letter of determination. And so some of these are, may look basic, but they are really, really important to start with. So, your EIN that you're going after, uh, the EIN you're going to get as you're actually forming the entity. So you're going to set up the organization, and you'll file in order for you to pay payroll taxes. You have to have an EIN for. So some of these, even if you're working with a good lawyer, they'll help you kind of go through this process. And you may not think about it too much. And so maybe that's the value of talking about it here is if you are formed, you've ever paid payroll, you have an EIN. If you've gone through a tax cycle and you're in the nonprofit status, you have an IRS letter of determination. Your state and local documents, you're typically doing that, like state registrations and things every year. There are providers that can help you with making sure that you're up to date on those different things. Physical address, you have to have a physical address. This is especially important over the last couple of years. Banks, and I've seen this on the banking side, there's been a lot of fraud happening from people outside of the US and also inside the US that are using post offices to run businesses, and they'll run up credit or they'll open accounts and they'll do money laundering. And it makes it really difficult for the financial institution to trace back to who that person is. And so you're going to see, in holdings included, where even opening a bank account, getting a credit card, getting a loan, you have to have a physical address. I get the work from home. I've worked from home the first year of holdings. We just building the product out. We worked from home, and but we still had the physical address. And you can use somebody's house. You can use, if you're co-working or you have a good friend that will allow you to use their address. Those are other ways that you can kind of access those types of things.
Ellie, what do you see in terms of some of this documentation? Is this ever a surprise to some of your clients? I mean, are they pretty much understanding that they need to get this, or is this like a last minute, oh my gosh, I don't even know where those files are?
So it's more of the latter. It's more that they have them, they just don't know exactly where they are. And I think that it's a good practice that you get organized from the very beginning, and that you kind of have a place where these very important documents are kept. And at YPTC, we call it our permanent file, where you keep all these super important copies of documents that you know exactly where they are when you need to get to them. And every organization can have that practice. And as Jason said, you work with a lawyer in the beginning. They help you get all of these established. Your articles of incorporation, your bylaws come into play occasionally. Like all of these really key permanent files belong together. That these aren't going to change on a regular basis, and they belong together. And but I really appreciate what you said about the physical address, and having to that's becoming more important, that people are paying attention to that, and that is a place where fraud can happen when you have these post office boxes. And I appreciate that banks are taking that more seriously going forward.
Yeah, it's really an incredible time to be talking about all of this, and then layer in fraud, because that is such a big issue across, not just the for-profit, but definitely the nonprofit sector. Let's talk a little bit more about opening accounts. I mean, Jason, you mentioned that there are different things that you should be looking for and how to navigate this. But it's not just a one and done. What would you recommend in terms of opening an account and opening accounts? Like, what should a nonprofit be looking for when it comes to these tools?
Yeah. Obviously, starting the business or the entity, you're going to want to open up a bank account. And that allows you to continue to, see that different cycle, even if it's not getting reported to a credit agency, to access credit. Most lenders, if you're trying to get a lender relationship, most lenders are looking primarily at cash flow, money in, money out. And one of the best ways to see the money in, money out is in your bank account. So you're gonna have them ask for, at the very beginning of asking for any kind of loan or lending relationship, is, and let me see your bank statements, let me see your tax filings, and let me see your financial statements. Even if you don't have the financial statements fully closed and in a really great place, bank statements can really solve for a lot of things, especially as you're looking at smaller lines of credit to start, like a credit card. So having a checking account that is there for you to kind of use, but also make sure that it's got good reporting attached to it, that it's easy to get the statements. You're not just relying on mailed in statements. So that way you can easily give it to somebody when they ask for it. Or, like Holdings, the way we've built Holdings is it's all digital. And so you can actually just connect it to your QuickBooks. You can connect it to whatever else it might be. And so your financial statements and your financial and accounting software is going to reflect what's happening in the bank already. So it makes it even easier that everything is kind of in one place rather than everything being disconnected. If you do a transaction today, it shows up in your QuickBooks, it shows up in your Sage Intacct, and you've got it all there to be able to kind of report off to different creditors.
Yeah, I think that's definitely made a big difference in kind of the timeliness of financial information, is being able to have banks connected right into the accounting system. So in real time, those transactions are hitting, they're matching with what actually got recorded. And you're like, okay, great. It's going to be an easy close at the end of the month when we do actually have the bank statement. And I think what you said, being able to access it electronically immediately when the month is over is the best time to do your bank reconciliation. But also many organizations need to be checking on a daily basis, like what's coming in and out of their bank account, because it may not match what's going on in their actual accounting records. And that's how you can catch really risky things too. But I'm also really curious, since we have this list of accounts here, I would love to hear your methodology about the business credit card, because I know so many organizations that get stuck in the executive director having to be tied personally to the credit cards with their social security number. And that's the only way the bank will give them a credit card. So I would love to hear what you have to say about that.
Yeah, there's still a lot of strides that need to be done there, I think, in the industry to make sure that it's not hitting personal credit all of the time. When you're first starting out, if you're trying to use credit to start, meaning that you get a credit card and you need to pay for some things while you're fundraising initially, you might not have an option because there's no assets or money in the actual entity to start. And so you might not have an option. I typically like to say in any, I've my background is being a lender. I've done probably about $1 billion over loans. And that those loans are anything from lines of credit to credit cards. And typically, if you've been around for a year and you've established, you should try to push to get away from a personal guarantee. If you have zero money in the entity's bank account and there's no history, you're in a tough position. There's just really no other options. And I would always reflect on, like, the lender's first goal is to get their money back. And if you think about a friend coming to you and asking for, $5,000 to spend on behalf of an entity they're getting started, you might also be worried about it. So, but as the time goes on and you have fresh funding, you should be able to access and release that. You can get a credit card that's under your name, and then you can get it released without having to get a whole new credit card with a lot of providers. And so that would, if you have a credit card and you like it, and you just don't like the personal guarantee aspect to it, first step would be to ask, hey, is there a way to kind of get this taken off? What we've done, so we have not launched a credit card today because we're still working on making sure. As a lender, I don't love doing personal guarantees. And I also don't love the idea of saying no 80% of the time. And so we are actually working right now with some funding providers that will help us create a more nonprofit friendly credit card. There are some credit cards out there that will kind of take cash collateral, they'll underwrite your cash. And that's great. But the one difficulty is a lot of these folks want to be able to spend it in advance because maybe they're on a reimbursement funding model, or they have a bridging, scenario where they need to kind of fund something, a program, because they're waiting on the funder that is, a little bit slower. And those credit cards are not going to be there when you need it, right? Like if it's underwriting your cash and you don't have cash, then and then like when you need it most, it's not going to be there. And we don't really want to create that scenario. And so we're working on our own credit card. Today, what we've done is we've partnered with all of the large kind of institutions from Chase and to others. And so our customers, as they use our servicing, our free bank account, we actually help underwrite the cash flow that's happening. And so we'll send them offers for non-personal guaranteed credit cards that they can access through some others. So today we're trying to solve the access problem where, I don't know which providers actually provide credit cards or loans to nonprofits. We solve that. If you work with us, we automatically kind of surface that to you and give you preferred offers from those folks. And then we're working on a better credit card underwriting that doesn't require personal guarantees and also doesn't collapse when you need it most. It needs to fit kind of that funding cycle. And I've seen some, spend management for nonprofits out there, but the challenge is, again, that's cash-based underwriting, which makes it a little difficult for the times when you really, really need it.
Yeah. So. It's like you said in the very beginning, it's such a tough thing, but you want to develop these relationships and really navigate towards these resources before you need them so that they are in place as things come along. You mentioned this at the beginning of the show, and as we wind down, I want to make sure that we spend a little bit more time on this, and that is the credit bureaus and reporting out. What does this look like in the nonprofit space?
So nonprofits do have credit reporting. It falls typically under all of the business credit bureaus. There's a lot of similarities between those because it's a non-personal entity. And so that's Dun Bradstreet, and that's the Dun's number that I think that we should talk about. The other two are Experian and Equifax. They all play a little bit different roles. Experian, I think, is the most recent into the space. They will take your reporting, and your vendors might report to those credit agencies. Dun & Bradstreet does something a little bit different in the Dun's number, where you actually need to use that for more identification of your entity, similar to an EIN when you're filing for different types of grants. So it's slightly different, but in terms of the credit reporting, it's the same, which is like, have you made your payments? Are you, what kind of past history or issues have you had? So yeah, those are the three to kind of focus on. The two ones that start with an E, and then the Dun & Bradstreet.
So let's talk about the Dun's number, Dun & Bradstreet. And I would love your thoughts on this, Ellie, as well. When we look at funders and grantors and even contractors that we might work with that are federal, state, or local government agencies, are they using or reporting out to these agencies for what they're doing? Because those are sizable numbers for a lot of organizations that we work with.
And just before you answer that, I think that's the only time I typically hear about needing to report your DUNS number is when it's in relation to government funding sources. They're the ones that typically ask, what is your DUNS number, and that you need to register it for their like reimbursement processes and things like that. So I'm curious to hear more about this.
Yeah, the DUNS number, you definitely need it for the government contracts. If you're working in that world at all, it plays a little bit of a different role than what we were talking about on accessing credit. It can play that credit role. Hey, I've made all my payments. I've done really good at managing my lender relationships. Even like landlords and things will kind of report on things. And so the government can see, they've had a really good kind of landlord relationship for a long period of time. And it's important to ask if they do report to Dun & Bradstreet. And so the government will kind of look at your DUNS profile as a, hey, is this business actually legit? And is it, kind of running efficiently? Or are we going to, use a grant to fund an organization that is ultimately just going to waste the money, right? So they're kind of using that a little bit in a proxy But you know, as you said, like the DUNS number itself is just kind of an identifier. Like if you're going to work with the government at all, they just want you to have it, which is good. It's efficient. It is kind of silly that we have an EIN for the tax number and then you have a DUNS number for identification. Seems like they should be the same, but they're not. So if you are going to work with the government, make sure you're getting a DUNS number in advance. You can call them. I think if you call them, you can typically kind of get that number same day. But if you're going to do it online, they have like a registration thing. I think it takes a couple days. So don't wait until the last minute. Make sure that you're kind of doing it in advance and not having to kind of sweat that piece of it. So.
Yeah. So Ellie, do you ever see with clients that they ask for YPT's guidance and is looking at their credit history, their credit worthiness? I mean, do you see nonprofits even thinking about that?
Honestly, I don't think they're thinking much about it because they really are thinking, okay, how do I get a line of credit and how do I make sure that we have a credit card? But as I said, what I see most often is it's tied to a person, right? Typically the founder or executive director has to be the personal guarantee on that credit card. And then, as Jason so eloquently pointed out, it's only easy to get a line of credit when you don't need a line of credit. But they often only think about it when they actually need it. And so that's the hardest time to get one. But outside of those two things, they're just not really, in my personal opinion and what I've experienced, they don't think beyond those two items and how to even establish being prepared for those when they need them.
Mm-hmm. Yeah, really interesting. Jason, as we end up, I've got to ask you this question, and this is probably something you know that's coming from left field, but at what point should a nonprofit really look at this? We tend to see so many organizations, even including funders, saying you got to get past this like 3-year mark before all these other things will kick in. How quickly should we be looking at this if we are starting a nonprofit?
I think you should start immediately.
Okay.
Like when you're starting it out, at least look at your plan and think about some of those relationships that you might be able to establish. That's kind of the reason why we built out our credit card and kind of lending solution, where if they need a bank account, so if they open a bank account with us, we're going to automatically kind of go and search for those things for you. And our bank account, we didn't talk about the savings account earlier, I guess, but our bank account, there's no difference in our checking and savings. It all pays 2%. It all has $3 million in FDIC, and there are no fees. So there's really no reason to move money in and out of a bank account. Just use it like a normal bank account. You're getting a better interest rate payout, APY, for the money than you would have putting in a traditional savings account, which pays like 0.02%. We pay 2% in totality. So I would start establishing just the relationships. Get your banking relationship solid. Make sure you feel good about that relationship, and then immediately start looking at who are the credit card providers in there. You don't have to do this daily. You don't have to do this weekly. You don't even have to do it monthly. But I would say like quarterly, I would just check out what's going on. Just Google out what is credit card for nonprofits, loans for nonprofits. And then, that allows you, especially as you get like a fresh new funding, if you're getting more, if you've doubled your fundraising efforts in the past 6 months, maybe that's a good way of thinking about it. And you just took on a big grant, go look for credit. That would be a good kind of signal that, hey, I should probably go look at the different credit options in the market. And don't get your hopes up too high. Don't make it your full-time job, but talk to 5 to 10 different people and see if it might be an opportunity now to kind of access. The other thing I would just say, we haven't focused on this too much, but as you get a credit relationship, as a part of the kind of talking to them, seeing if they would give you money, also ask for introductions to those they've given money to. Just because you get your first lender relationship that says, hey, I'll give you a line of credit, doesn't mean it's a good option. I would talk to a few if they've worked with nonprofits talk to a few nonprofits, talk to those executive directors, make sure that they had a good relationship and a good experience. And so, it's at first, and this is every type of, business, nonprofit, feels really antsy to get their first lender relationship. But there's an importance to not rush into it either. So don't get too excited when you get the first offer.
Yeah,
Make sure that you're vetting them out just as much as they're vetting you.
That's so fascinating. Check the references. Check the references. I love it.
I love it. I think this is great. Well, we're going to have more conversations about this because it's such an interesting time. We talk about this all the time. Operate like a for-profit business. You need to be looking at more structural things in that for-profit way. And so, Jason, this has been great. Jason Garcia, he's the CEO of Holdings. You can learn more about Jason, their team, and their services that they provide at holdingsforgood.com. It's really a pleasure to have you part of the nonprofit show family, because this is just one of those things, Jason, that we know is a problem, and yet we haven't had leadership really to help us understand how it needs to work and how it can work, right? And so I appreciate your transparency, and I love that you said don't get your hopes up, but keep going and understand the relationship side. So that was really awesome. Ellie, this was a wonderful conversation, a great start, isn't it?
Yeah. Thanks a lot, Jason. Really appreciate the information today. I have a lot more questions, but we'll have to save that for another episode.
I think so too. Yeah, I think we're going to just start peppering you, Jason, with all sorts of questions and things that we want to talk about on the nonprofit show. We get to talk daily about these types of amazing things that are the backbone of our nonprofit sector, because we have support from these phenomenal partners. They include Bloomerang, American Nonprofit Academy, JMT Consulting, Interim Executives Academy, Your Part-Time Controller, Fundraisers Friday, and of course our new best friends, as I'm going to call you, Jason, at holdingsforgood.com. Been really a great conversation. As we end each and every episode, we leave you with this, and that is, and I'm thinking about the financial side today, to stay well so you can do well. Thanks, everyone, and we'll see you again.